Okay, so the meeting has started. This is the Finance Committee meeting of the Duluth Community Service District, Tuesday, December 20th at 2:30 p.m. So both committee members are here. And the first thing we can do is to see if there's anyone that of the public that would like to make a comment. There's no one that is tuning into our Zoom meeting. There's no one present. There's no one to make any comments from the public. So we have to approve the minutes of the previous meetings. Any objections to that?
No, I'll make the motion to approve them.
Okay, and I'll second it. Now we can review the general fund and sheriff plans. And if there are any issues or questions, I see the truck maintenance.
Yeah, I saw that too. Transmission engine.
Part of the engine, they had to replace the transmission. And it was actually two trucks had two different issues. One truck was the major issue.
Right.
And then there was some work done on the other, one of the other trucks, like the undercarriage. They had to, it was cracked and they had to replace that. And it was leaking water. So they had just a bunch of
Little
things that kind of added up.
Okay.
And I think that you had mentioned that to us before, that there was a problem with those trucks.
How old are they?
Old.
There, I
How old are
think,
they?
yeah, the oldest one I think is 2010.
Mhm.
And the newest one is 2016.
Okay.
Both of those are newer than mine.
Yeah, mine too.
Well,
They just did, there's so much.
I understand when you
yeah.
have multiple drivers and things like
Yeah,
that.
and the terrain.
That's
And the
right.
terrain going up and down and yes.
So
Put 'em on.
they're not, the ones that we repair aren't worth maybe $5,000,
Right,
but they're still working.
right.
And so when he came to me and, well, there was a lot of phone communication between transmission people.
First of all, let me interrupt you. They're probably worth more than you think. Used trucks are worth a lot more than what you think they are.
That's probably
And they're in
true.
good shape now.
Yeah,
I mean,
yeah.
So
Yeah.
But go
hopefully-
ahead, I'm
But
sorry.
This was like Blue Book. And of course, the presentation to me was, well, the truck shot.
That's why I knew one.
I said, yeah, let me talk to the mechanic. And he said, well, $4,000 to put in a new transport. I just did my own truck for that. And so I knew generally what the cost was. And so then, we had to wait for a day or two. Did we spend that? Or did we start shopping? And I decided it was better for the district. Let's get those trucks to the point where they won't even roll anymore.
Wasn't the base model of a new one, you know better than me, 70,000?
These things are cheap.
Yeah.
Yeah.
They're
And-
expensive.
And we may be facing that. I think we've also discussed this
Right,
about
Right.
the towing
Mhm.
of the heavy equipment.
right.
So it's possible that we're going to have to buy
One.
a used,
Yeah,
but a heavy duty
Right.
350 or whatever.
yeah.
And that's probably in the next few months.
Oh,
But
you
we're still
think that's it?
exploring alternatives about the towing and the weight.
It's a major expense there, isn't it?
Very, yeah, even used. They
Right.
started
Oh,
showing me some numbers
Right.
and that's.
We bought, well, I have a 2004 GMC. It has like under 70,000 miles. And we probably could get $9,000 to $10,000 for it. It runs beautifully. But because it was old, my husband wanted a newer truck. So we bought a 2018 last year, a used 2018 Denali, GMC
Mhm.
Denali. And it was, had like 34,000 miles on it. It was almost, with tax and everything, almost $70,000.
Yeah, that's a lot.
It's a lot of money.
Incredible.
Yeah.
Okay, so next thing is the Wildan,
Mhm.
which is, you have those listed there.
Right.
So, and the traffic study, they don't do the traffic study, do they? Is
That's
that
Steve.
Yeah,
Steve?
Steve. Mhm.
But he gets paid through Wildan?
Uh-huh.
Okay.
I remember we had.
Yes, I remember. Okay. All right, and let's see,
The impact fee, that's a big one.
don't see anything else that
No.
if you do have another Chevy truck repair on the next page.
Yes.
Oh, that one, that was two trucks too.
Yeah.
Yeah,
And that's.
there was kind of all together, it all hit in 1 month. We got all
Okay.
of them kind of up tip top as they can be right now.
Mhm.
So, yeah.
There was a period of time when some of these repairs were known repairs over a period of time. And so finally, I think I just said, to get it fixed,
Yeah.
took
Yeah.
him in and,
This is wrong with this is wrong with this.
and that was that water leak. and
Yeah,
all
you
this.
don't want everything fixed.
Yeah, I don't blame you. That's good to get them in order.
Okay. Now you have down here on the financial matters, the Caltrans UAL. What was that discussion for? I thought we did that the
I
last
think
time.
we talked a little bit about it, Jim, but
Yeah.
we're, gonna talk more about
Kind of like stepping along.
our phasing,
And,
what we
uh,
think and what.
You were going to find out some information for us before we had that.
What we were gonna do, which kind of, we got stopped on some other stuff with this, but we were going to like show you some information, like if the actuary guy that's out with us,
Right.
what are your different options for paying different things off?
We
Like,
were also going to contact that person, the attorney or whatever she was, that had given us the report a few years ago, because her numbers didn't seem to match some of the numbers you got, and we were going to try to work that out.
yeah, I mean, I don't think we mentioned her, but I think the main thing was we were gonna try to look at different things with the actuary.
Well, I
what
thought you
different-
were going to contact her. That's the way we left it.
Well, I remember that, but I don't remember what I was going to.
Well, her numbers, as I recall the report, were substantially more for us to pay this back than the person that you told. We wanted just to go through this, to have her look at these
Okay.
numbers and validate that, yes, that's what you would have to pay.
Oh, I see what, the total UAL, like, is it 1.3 million? Is it,
She was up around 4 million.
Yeah.
but that's, I
If
think
that's
you have
if
to
we
pay
dissolve.
if we dissolved, yeah.
What we're talking about is just to pay down the one.
I don't remember dissolving. I remember paying the whole thing off. And she said because of other factors going forward, you would have to pay that some large amount like that. I just wanted a clarification on that.
Okay, look, I think I got off on a different tangent.
Yeah, I think we did, we started talking.
Maybe you
about-
should look at her report again.
Mhm.
What was her name, Salt?
Oh, I know who it is.
Okay.
I can't remember right off.
And maybe send us a copy of her report. We can
Yeah,
look
yeah,
at it.
because that's a couple of years.
Then you can ask her about it.
And then, so what we're gonna do is compare.
Mhm.
Or validate this guy's numbers.
Right.
Which would be very helpful to us.
Mhm.
Okay. And then the LAIF is looking better.
Yeah. Little at a time.
Yes. I see you gave us a daily effective yield.
Yeah, so like the last one I did was 2.23 or something like that. Or was it the first number on that page?
214.
2.14. Okay, so yeah, I mean.
It's coming
going
up.
So.
Yeah.
One thing I wanted to mention is we just started looking at this because over the week, this last weekend, I saw something on TV or something about what T-bills are paying. And that's what we used to invest in
Okay.
because it's federal.
Right.
Right.
You get them through a bank and you don't
Yes.
go over 250,000 at each of the banks,
Mhm.
right? And so I confirmed, I mentioned it to Teresa Monday, she's pulled it up and they're like 4
Really?
on a 90-day. So I said, what's LAIF? And she said 2, okay? So I,
Happy amount.
I'm gonna bring it up Tuesday, that perhaps we should, it's work, because you have to go through the same rigmarole, get an account, get all the signers, all that stuff.
Mhm.
But if you have maybe like generally entities I've worked with, they want to be local.
Mhm.
So you find like some local banks, not
Right.
B of A and Wells, and
No,
that. They
no.
try to support the smaller guys
Mhm.
like Banner. And maybe two or three and just open an account
Mhm.
and buy a 250 T-bill on a 90-day. And then basically you just roll it
Just
every
keep rolling
90
it
days as
over.
long as it's going in the direction.
That's
it's
right.
And the
That's right.
interest, yeah.
And so we haven't done this in 10, I haven't seen this in 10 years because of, the economic situation that has
Right.
been.
Right.
But it might be something to look into to raise our return.
Mhm.
And because if we had, say, three banks with each 250,
250,
had
right.
750, that's
Mhm.
right. So
And
my guess is
4%.
it'll run parallel to this, so probably double LAIF.
Mhm.
So maybe you can just keep rolling.
Okay,
those.
let me ask you, how much money do we have in this?
5 million,
Yeah. so
That's
it's on
ours.
that.
I saw that.
Yeah.
That's our money.
yeah.
I
That-
know.
That's your cash. Now,
Right,
this cash on our books is, a lot of it is, protected. Designated or whatever,
right,
you're gonna have a closed session about. this
Restricted.
lawsuit.
Right.
Restricted.
right,
Well, plus there's a certain restricted amount for these accidents that
Okay.
happen,
Right.
or like a
Right.
big washout or something. So I think we keep 500 just for that purpose.
Mhm.
In this case, we spent 150 with the hazmat company.
Right.
That's what we're trying to get.
Right,
back in
get
there.
that,
So
sure.
So in that cash, if we settle this case or they pay us back,
Mhm.
that'll inflate our cash.
Sure it would.
But that 500 is always restricted.
right. You can put that 500 in the T-note, it's still restricted.
Right.
In fact, that would be the ideal thing to do.
Right, because you're right.
Because
Yeah, no, you're
you see, the
right.
issue with,
As long
with
as
this,
it's
we looked at this,
90 days.
some issues before, is that there needs to be some flexibility with paying bills and getting money and that sort of thing. So you can't put it all in there,
Right.
but you can put a substantial amount, and anything that's restricted should go into the T-note, because it's not likely that you're going to need it in the next 90
That's
days.
right.
1.1, whatever, green and yellow sheet
No.
with us here.
Oh, roadway rehab?
Isn't it like 1.1?
I have it right on
is the
top of my desk.
restricted, reserve?
I think so, I don't know
Oh,
if we get it, yeah. It's
Okay,
But
and
all-
have we
all
paid-
zones.
But even that, you have to be careful about, because if you have an issue
Mhm.
in some zone or something, in other words, you
Yeah,
just have to
Yeah, you can't-
use judgment about how much you're going to do.
Right.
Because you need to have flexibility in terms of
You sure
getting
do.
some cash out.
But you can take your money, part of it out and put it in a T-bill
Yeah,
and restrict that.
because LAIF, when this started, and then it happened in my career time, because people were, some elected officials primarily, this could be communism, giving our money to the state, like in Orange County, it was very
Right.
conservative. And well, that's great, we're getting all this return, but are they gonna, in
Yeah.
hard times, are they gonna take our money away from us, that kind of thing.
Mhm.
This was really meant for the cash flow.
Right.
So you had all your investments and that was maybe 2/3 of your. cash.
Right,
And then you use this to pay the bills.
Right.
And still earn interest. What's happened though, with the way the economy's gone over the last 20 years. or
Right.
whatever, all the money, and I'm sure we're no different than most of the government agencies, it's all in here right now.
Yeah.
Because there's nothing to invest in,
Right,
but that's changing.
yeah, with the T-bill, sure.
Right. So I was shocked that the T-bill was 4. I guess I just hadn't been reading the business
Yeah.
page. And I thought, what, 4%? I think I remember we were at 2, and sure enough, we are.
Yeah.
So anyway, if you'd like us to look into that.
I think, yes, absolutely.
Maybe at the next meeting, we can have some kind of a.
Yeah.
right.
And I think we got talking about this and, relating it back to calculus, and there's a lot of things we need to look into and try to get it, all together and
Yeah,
in a
because of that,
understandable format.
that 4% increases our money input. And so, just depending on you never know how long that 4% is going to last, if it's going to go up, go down, you just don't know.
And
But
the
that all
amount
helps.
itself. I mean, for example, that $5 million in there, we're gonna be writing huge checks for the slurry. So
Yeah, I was
that's
going
gonna
to
go
say.
Way
Well,
down.
in Buena Vista.
But in January, at the end of January, we did our first benefit fee payment, which is about $1.4 million. So, you know, it's
Yeah,
going
it'll
up and
be
down.
up and down,
Yeah,
sure,
so.
sure.
Now, so I think that's a good idea. Look into it, let us know. And also give us an idea about how much you think we could safely put into that. And, you know, again, we're knowing what we're going to be spending in the near term, and
Yes.
what the movement of cash would be. Jim, I wanted to give you a chance to give us an update on FEMA with particular reference to some comments made relative to FEMA and the way we are drawing down on FEMA.
Are you talking about the last board meeting?
Right.
Well, the statements made at the board meeting didn't relate to what we were talking about. It was their interpretation of what we were talking about.
Right.
And I'm trying to remember what we were talking about, which was,
I think it had to do with administrative funds.
okay,
Right.
category Z.
Right.
Yes.
What we had explained in a meeting, I think it may have been this meeting,
Mhm.
is once your project is completed, then you're eligible to apply for 5% of administrative and overhead costs based on the 5% based on the total cost of the project that FEMA had paid for. So you don't know till you get to the end
Right.
what that number is. When you make your application, you can't just say, give me 5%.
Mhm.
Okay, so you have to take your payroll of all the people who've worked on it over the last 2-3 years. And any cost, and this was a lot, consultants, engineers, environmental people, whoever's worked on the project. You put that together and you multiply 5%, and that's $100,000, let's say. Then you have to show that you actually had overhead and expense of 100,000, demonstrate that. And then you apply for it and they reimburse us. What I had said is something to do with the engineering expense. Our contention in the arbitration was that engineering expense of consultants is an eligible expense.
Right.
That they don't just have to be on your payroll. And that's what the judges said, no, they don't agree with that, okay? We still incurred that money, so we didn't get the money there, which was a full
Right.
amount. But we could take that and make it part of the 5%.
Right.
And so that's what I meant.
That's what you said, actually, because I recall, that was what was misinterpreted.
Totally, because
Right.
that's all eligible.
Right.
Engineering
Yes.
expenses.
I thought it was important that we just clarified
Yeah,
that.
Yeah, I think so.
You know, so if there's any further question of that, then what we might also do is just make a report on that to the board tomorrow. Right, and I'll ask you to explain that. Okay,
And I'll shorten it.
Okay.
I thought that was pretty short.
Oh. Well, I'd kind of forgotten. I think I wanted to forget about it
Yes.
because it was just so true.
Yes, it was.
That's all.
Okay, how's the audit coming?
It's going well, it's going, so a couple of things have come up and I don't know. So I think I told you last meeting that they have everything.
Yes.
All the documents
Yes.
that they've requested in their link is uploaded.
Right.
So they started to look at everything and it's going fine, but I guess we had a little bit of different understandings of what their scope was and our scope. So working with Leaf and Cole over the past 25 years, whatever it's been, is I provide all the documentation and information. And at the end of the year, they do adjusting journal entries, depreciation,
Right.
all those kind of normal things. Well, Leaf and Cole has been always done that for us. You know, they give me, after I give them the information and they're crunching their numbers, they come back and give me a list of adjusting journal entries,
Right.
which I will go into our general ledger and
Right.
write for that year. Well, after working with them a little bit, it came clear that they were expecting that we were going to make a lot of those entries,
Right.
which there's some that I can make, but usually we're so small, we've always operated that your auditor is doing the adjusting journal entries. Now, whether that's right or wrong, that's just how we've always done it. So then Jim became involved and we started talking about it more.
So we had a phone meeting this morning, actually. And I mentioned to him that we were having this meeting today. Because I knew when we changed auditors, and I've just kind of been keeping an eye on it, that issues about us having a new relationship could come up.
Sure.
And so sure enough, it came up last week and then this week. And they're expecting that Teresa will do more accounting, okay, than we've ever done before. And so I said to Teresa, when she told me there's this issue, which one told me that we're getting close to wrapping this audit up because they're down into the fine parts of it, all right? But the last conversation I had with Leaf and Cole, when I said that the board had decided to go with another company,
He told us that this would happen.
you did. And
I
he
remember
said it
that.
in the interview,
Yes.
and then he reminded me again.
Yes.
I said something like, well, I enjoyed working with you, and maybe someday we'll
Yeah.
work together.
He told
And he
us.
said, it may be sooner than you think,
Right.
Okay.
because
Right.
they were doing more than
Okay.
the AICPA allows. And so what he said on the speakerphone this morning is he said, we understand that she's not a CPA.
Right.
But in terms of actually closing your books,
Right.
we have to have somebody make these AGEs. There's about half of them
Right.
that now the rules have changed. And in other words, the rules say now that if they can't audit their own AGJEs.
Right.
Okay.
They can't make them and then,
And
Yeah.
yet she's not at a high enough level.
To do
okay?
that, no.
And in the past, it's always been that way, and that's what happened. So the solution, he said, this comes up, especially with the smaller clients like you guys. We've got another CPA firm who will
Right.
come in and close your books.
Okay.
Right.
Okay.
And then we'll audit their books. So I said, fine, just get them on the phone, which we're doing as we speak. And just give us a price and have them come in. Because then continuing on, I think he was a little concerned what my reaction was gonna be.
Right.
And I said, no, I'm open-minded to this. Let's just talk this through and see where it goes, because I expected something. And so what we concluded is that this could be something we have to do every year,
I think it might be.
but it's
Sounds
also possible that this could be a training program. That they could train Teresa to take her to a higher level, perhaps. That would be the best, probably the best. case.
especially since, we're working into having more help on the front end stuff through Jessica. So they said to where we're at right now, sorry to butt in, but where we're at right now in audit, it's wrapped up enough where we could have this person probably come in for 2 or 3 days,
That's what
hopefully.
he thought.
That's it. I mean, to help just closing, it's not a big deal. And then if it works well, like Jim was saying, we either have them come back once a year, you can do it quarterly, or like he said, use them as a template that, okay, I know what AJEs that I need to make, and then I'll be able to make
do
them
it
going
yearly.
forward.
Sure.
So we don't know at this point, but
But-
I know what they are. I mean, I know the AJEs. We just never, had to worry about them before, but
So I'm thinking we just jump into the pool the
Mhm.
first time,
Mhm.
get these people in here.
I think so.
Get it done, and then let's see where we're at for next time, because fortunately, we're about $5,000 positive
Mhm.
on what we were paying
Right.
versus what we're.
So
paying.
that monies that would help.
And I asked him, I said, how many thousands of dollars are you
Mhm.
thinking? He goes, oh, we're only talking about 2 days of work. If that,
Mhm.
they just have to come in and basically make these
Adjustments.
adjustments.
Mhm.
And basically allow us to close our books so that then they can audit books they haven't closed.
Right.
And so it's like, okay, well, so what I'm inclined to do is just to get their number, it'll be tomorrow.
yeah.
And then just say, get out here in the next week or so and give it a try.
Yeah.
And then hopefully we can, I think it is possible, because when the conversation started before the phone conversation with them, Teresa's like, well, I could do this, I could do that.
Mhm.
You've heard that song.
Oh, sure.
With her before. And I'm like, hold on,
Yeah.
like,
Right,
I need to understand, how
Right.
much more work we're
Mhm.
taking on.
right, exactly. I was about to
And-
bring that up.
Yeah, so, I think we just need to step through, pay this. other
Yes.
Right.
Yes.
We
you're
watch them, they will know that if there's something that we can be trained
Mhm.
on, then we'll look at that.
Right.
But if
right.
it's gonna add,
A lot more work. It's
Forget
not,
it.
no.
we'll look at.
Particularly
the
when the
other
costs
ones.
aren't excessive. I
Exactly.
think the reason for that is that this would be a time of year, if we get into a bad situation with flooding and that sort of thing, you're 9, 10 months later with FEMA.
Yeah.
And this is gonna be a very busy thing, and she's gonna need to be very much involved in that.
Mhm.
And what we don't want is an audit that comes as late as it did last year.
No.
That's a big problem.
No.
But we're looking at, because that's how we concluded this conversation this morning, is what's the time frame?
Mhm.
And he said, well, we don't think we can get it to the January meeting, because we've got the deadline for the state. the
Right.
End of the month, end of
Right.
January. And he said, but we should be pretty soon thereafter. And I said, so you're talking about you can be at our board meeting in February?
Wow.
And he said, oh, absolutely.
Okay, well, tell him
Yeah.
I'm not around in March. I will be away in March for the board meeting.
Well, I
So he
don't,
has to be here.
I don't think it's an issue, because he's
Right.
telling us, oh, wow, you're gonna give me till the February
Okay.
meeting? And I said, well, you're gonna get a
That would
lot
be
of brownie
perfect.
points if you could really pull this
Yes.
off, because that'd be
Great.
the earliest we've had in years.
Mhm.
And he said, okay, shouldn't be a problem.
Okay,
Then that
So
would
I
be
think we're in
wonderful.
good shape.
okay,
And I noted, you said you're not gonna be at the March meeting.
right.
Okay.
Oh, one more thing, I just wanted to bring up, update the FEMA money coming in.
Mhm.
Yes,
A few days ago, I did get confirmation that, Via Vaquero, the culvert Via Vaquero
Mhm.
has been approved and it's in finance, getting ready to be paid. So that's $316,000 that it has no problems whatsoever right now. So we should have that in a couple of weeks.
and what about Sandia Creek?
Well, you recall, we were battling.
Yeah.
Environmental, and they gave us 17 questions or whatever. We had our environmentalists through Wildan to answer the questions.
Okay.
We were supposed to have a meeting, we haven't heard back
Okay,
until last week. And we just got an email saying they have 5 more questions. So
okay,
we're sending that right as we speak, it's going back to those same environmental people. So it looks to me like 12 of the 17 were okay,
Good.
acceptable,
okay,
because they only came back with 5.
Well,
And they were related to the original questions, like they had wanted further detail. So my guess is we're gonna pull this off. And,
How much will that be?
Yeah,
that's another 400.
Oh, very good,
wow, good.
Yeah.
That'll
very good.
help a lot.
Okay, excellent. That's, it's all very good. All very good. Of course, they could come back with 3 more questions the next time.
To-
And then
Possibly.
2, and then.
Yeah.
Yes, yes,
You never know.
yes, yes.
We'll all be in the rest home somewhere.
The other question I have is unrelated to finance, but very important. Has our attorney written the first draft of the letter yet?
We're working on that now, so I don't know.
I mean, that really needed to be done before Christmas.
Yeah, yeah,
And we're not paying.
Yeah.
Okay, because he's not
yeah,
on.
yeah.
Hey, I got December bills I can hold
Yeah, it's-
Mhm.
ransom.
right,
Yeah, well, it's not warrant, it's the special.
Right.
Oh, yeah.
right.
And that's not really finance, that's your other committee. So
Right, I understand.
we'll discuss that in a little while, just so we're not mixing.
I
Oh, yeah,
understand.
yeah, I see what you're saying.
I understand. Okay, very good.
And I was joking.
You don't have to be joking about that. That's okay. Anything else? Anything?
No.
We can then adjourn this meeting. The meeting is adjourned.
You're right.